Is there a tax strategy that's costing you millions of dollars in funding? Well, check this out. Do you think your tax saving strategy is airtight? Now, what if I told you that it might actually be costing you the reason that your business gets denied for the funding that you truly need and deserve? It's like building a beautiful house, but forgetting the foundation. It'll crumble when you need it most. So one of my clients actually learned this the hard way. They actually came to me after their tax saving methods left them without the funding they needed to grow their business. But here's the twist. With a simple shift in strategy, they not only position themselves now to qualify, but unlock millions of funding opportunities. So in this video, I'm going to share the story, what went wrong, how you could turn things around if you've ever saved for taxes or plan to do so. You don't want to miss this because let's make sure that you have your financial house in order and it stands strong. So watch this video to the end to make sure that you have all the strategies that you need for your business. So this couple came to me and they bought a assisted living facility, and they used two loans to do this. One for the real estate. They got like a bridge loan, or like a hard money bridge loan to purchase the asset, and then they got like a private loan to pay the rest of the indebtedness to purchase it, as well as to have a little working capital. How the first loan is coming due now, so now they need to be positioned to be able to get the funding that they need. Now, because the first loan doesn't take care of all their debts, what they're looking for ideally is an SBA loan to be able to pay off both loans, because the appraisal shows that between the two, the value is there to be able to do so. However, here was the problem. Okay. Um, and one of the things that they did right, like if you're going to buy an asset like this, you have one entity that buys the business, right? And then one entity that owns the real estate, right? It's the holding company. And the business obviously pays the holding company rent to pay the mortgage, right? So that is good. That is, I don't see anything wrong with that. From a tax strategy, what that will do is allow you to, have two entities that reduce your tax liability and also kind of protect for other liabilities, right? The other challenge is now there's this marketing entity that also is taking money out of the business, that truly parts of that was like paying towards other loans and that kind of stuff, which I personally don't agree with that, mainly because now here's the situation. Now, from a situation of not having tax liability, not having to pay loans, I don't, there's nothing wrong. I mean, paying taxes, I don't see there's anything wrong with that. However, one of the problems is now they're trying to pay off both of these loans. And the ideal way to pay off both of these loans is to get an SBA loan, because to make sure that you not only have enough money to pay off the loan on the property, but also for the loan against the business, or so forth, or the total indebtedness, so to speak. But when you have this other marketing company taking out expenses, your bottom line, your net income, you're not showing enough cash flow, so to speak, or debt debt service to be able to pay back a loan. Now there's some add backs. You probably say, well, why don't I just do an add back? Well, the add back is 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 gone. Well, one add back you got depreciation, but the other is gone if you're not able to show the funds. I'll just say it like this: most underwriters don't want complications. You know, two entities, they could probably, figure it out. Three entities, that's starting to get a little more complex. Now, if I would say like if you didn't, and I guess if you're doing a situation for asset protection, one of the good things is that you can, especially like if you don't have any indebtedness or any loans against it, that could protect you from, you know, being sued or whatever, having trust and all this kind of stuff. But for the simple fact of being in the position to get funding, that because look at it this way. If someone wants to take the business and real estate and that kind of stuff, they're going to be behind all these loans, right? So if you own this situation free and clear, having this shell game and all that kind of stuff I personally makes more sense. But if you don't have all that, I just don't think, especially if you're going to need money to grow and cash out and that kind of stuff. It just is, and you know that you have these big mortgages and that kind of stuff coming due. It just doesn't make sense to set up the entity and stuff like that. So definitely join. So you say, well, what about me and my special situation? That kind of, I would say definitely join because one of the processes that we do and to kind of go through everything is we do what's called a business fund analysis, which is very individualized, where we're looking at exactly their situation because it takes a lot of time to go through all that because we got to write a credit memo and that kind of stuff to the bank and financial institution to be able to explain the situation, right? And what's going on to be, to so they dig in because if you don't, they're just not going to, be bothered with all that. So that's the situation. Make sh- make sure, especially if you're going to get financing on the short term, make sure that you strategize for the purposes of being able to get out of that situation. I know you can do other things like cost segregations and some other stuff and depreciation to reduce your tax liability instead of doing that shell game. Well, I'm interested to see what you think about this. If this would help you, definitely comment below. And then join our Keys for Business Masterclass, keysforbusiness.com/masterclass, so that you can learn more details on and how to get access to this business fund analysis and so forth for your individual needs of your business. All right, thanks for watching.